Welcome back to another video, investors. Today we're going to do our weekly tanker market update, and it's an exciting time for tanker markets. We're going to start with Frontline because they reported their fourth quarter and full year 2020 results, and in the upcoming week we're going to have NAT also releasing their full year and Q4 results. Okay, so let's get straight to the numbers, and then I want to comment on what the CEO is saying because we can glean a lot from what the CEO is saying in terms of the future and the longevity of the tanker market. Okay, so let's get right into it. So first, let's look at the highlights. So 2020 was the strongest year for Frontline since 2008, which is saying quite a bit. So the full year was very strong. So adjusted net income of $421 million or $2.13 per diluted share for the year ended December 31st. This is crazy because right now Frontline is trading at $7.38. That just shows you how cheap the PE ratio is when for each share Frontline earned $2.13. Okay, so which is like more than a fourth of what the price is right now. Okay, so that would be like a more than 25% return just over the year on what they earned for the diluted share. Okay, but this next news, their fourth quarter results, is not so promising. Okay, so they say that overall the year was the strongest yearly result since 2008. However, there was an adjusted net loss of 20.2 million or 10 cents per diluted share for Q4 2020. Okay, so it shows what the pandemic did to the oil tanker market. They earned a lot at the beginning of the year and not so much now in Q4 and even probably in Q1 of 2021. All right, so they reported total operating revenues of 174 million for Q4 2020, and the spot time chartered equivalents for VLCCs, Suezmax, and LR2. LR2 is actually clean carrier. In the Q4 were 17,200 for VLCC, 9,800 for Suezmax, and 12,500 for LR2 tankers. Okay, and of course, VLCCs carry twice the amount of oil, Suezmax carries half, and LR2 I'm not sure, but that's a clean carrier, not a crude carrier. VLCC, Suezmax, and Aframax, those are all crude carriers. Okay, so like dirty oil in quotation marks. So for the first quarter of 2021, we estimate spot TCE rates of 22,600 contracted for 78% of vessel days for VLCCs, 17,800 contracted for 68% of vessel days for Suezmax, and 12,200 for 65% of vessel days for LR2. So that's actually some exciting news. These are much higher rates than what were received, or kind of higher rates for what were received in Q4 of 2020, which we're going to compare down below because they have this in a nice chart. And so they entered also into 3 senior secured term loan facilities. So basically that just means they're refinancing and they're also they're taking out more debt basically. And when the tanker market isn't doing so well, like right now, they just want to take out a little bit more debt to get them through these times so they can come out at the end and they can still be liquid and obviously not go bankrupt. Okay, so that's important. But again, the market seems to be pretty optimistic for the future of the tanker market, which we're going to look at the stock price of Frontline, NAT, EURN, and DHT. And then we're going to read the statement because I think I think this says a lot about the tanker market going forward. But first, I just want to go over, of course, the spot rates for the first quarter of 2021, which also makes me kind of excited. Okay, so you can see in 2020, they earned the spot rate of 54,500 for VLCC carriers, 35.6 thousand for Suezmax, and LR2 23,400. Compare this to the fourth quarter of 2020. Their spot rates for VLCC were 17,000, so quite a significant, below the 54,000. For Suezmax, of course, close to 10 grand, nowhere near the 35 grand, and for LR2 was 12.5 instead of 23 for the full year of 2020. Okay, so of course they took a beating in Q4, which again was expected and it was already factored into the stock price. Okay, because the stock price did not drop after earnings. They announced on Friday, but it kind of didn't do anything. Even on the week, the stock is still up by 9.33% from Friday to Friday. Okay, so no complaints there from the stock price perspective. Okay, even on the month, it's up by 19%. Okay, so that's pretty good news. One thing I want to cover here is, again, what they booked. Their spot TCE estimates for Q1 2021 is 22,600 instead of what they had for Q4 was 17,200, so a bit of an increase. And for their Suezmax, again, increase to 17,800, and a little bit of a decrease for the LR2 carriers, but overall, this is a positive note for Q1 2021. They actually may be able to either break even or post a bit of a profit or a bit of a net loss, okay, on either side. But for Q1 2021, I think they're going to break even ish, okay. And this is the estimated average daily break even rates for 2021. Okay, so of course these are all just estimates, but they're pretty good estimates. So for 2021, they estimate that you need to earn $21,600 for VLCC carriers to break even. But for first quarter of 2021, they percent covered, they've received already, they contracted out at 22,600. Their break even rate, they're basically breaking even with the Suezmax vessels, and they're going to be losing a bit of money for of course their LR2 carriers. So I mean, now actually going over this tells me that they're probably going to post a bit of a net loss, because they only have like 78% of the days covered for VLCCs, 68% of the days covered for Suezmax, and 65% of the days covered for LR2 carriers. And so the rest of the days, they might have to contract them out at just the spot rates, which tend to be kind of lower. It depends on the situation, really. But I see them losing a little bit of money in Q1 of 2021. But again, it's looking positive, especially when we compare the Q1 rates versus the Q4 rates of 2020. It's a positive note, and hopefully it just goes up from there with increasing oil demand, which will increase the spot rates, which will increase, of course, the movement of oil, which, of course, that's what the tanker business is in. Okay, it's the movement of oil from place to place, or the storage of oil if oil supply exceeds oil demand. Okay, so again, the estimated average daily cash break-even rates are the daily TCE, so time charter equivalent rates, the vessels must earn in order to cover operating expenses, including dry docks, repayment of loans, interest on loans, bareboat hire, time charter hire, etc., etc. Okay, so this is also very important here, this paragraph here. Spot estimates are provided on a load to discharge basis, whereby the company recognizes revenues over time, ratably from commencement of cargo loading until completion of discharge of cargo. The rates reported are for all days up until the last contracted discharge of cargo for each vessel in the quarter. The actual rates to be earned in the Q1 2021 will depend on the number of additional days that we can contract, and more importantly, the number of additional days that each vessel is laden, which means filled with oil. Therefore, a high number of ballast days, basically ballast just means when the cargo is empty, there's no cargo, therefore there's no oil, means they're not earning any money. A high number of ballast days at the end of the quarter will limit the amount of additional revenues to be booked on a load to discharge basis. Ballast days are days when a vessel is sailing without cargo. Okay, exactly what I said. Therefore, when a vessel remains uncontracted at the end of the quarter, the company will recognize that certain costs during the uncontracted days up until the end of that period. So basically, of course, when they discharge their cargo and they're returning or picking up more cargo, the days where they're transporting in between contracts is days, of course, that they're not recognizing any revenue, and therefore they incur a loss. Okay, so pretty much I think what they're saying here is expect a bit of a net loss in Q1 of 2021, and hopefully upwards from there. Okay, so let's see what the CEO says going forward. Okay, and I think this is very important here. So in 2020, Frontline recorded its strongest result since 2008, but Q4 of the year reflect the challenging conditions tanker markets experience as record volume of oil inventories are drawn. Global oil demand is growing firmly, again a positive sign and something that I've been saying in my videos, and all leading to commodity markets are pointing towards a strong recovery for the world economy in 2021. Demand for tankers is currently muted as total volume of oil transported is capped. Okay, so people aren't producing that much oil, right? There are indicators that we may be near the end of inventory draw. So inventories are still at near highs, but they're nearing the end, as OECD stock levels are approaching 5-year averages. So pretty much, of course, we had an increased supply of oil, but now we're actually decreasing that supply, and they're approaching 5-year averages. The strong development in oil prices implies real demanding return, most notably in Asia, where we are close to pre-pandemic levels. When global oil markets switching from drawing on inventories to call on equal volumes from the marketplace, growing demand for freight should be expected, as I've been saying. At this point in the curve, we believe Frontline is well positioned to capture a recovery for tankers with our low cash break-even levels and a spot exposed fleet to modern fuel-efficient vessels. Okay, so what they're saying is pretty much they have optimism for the future of the tanker market. They're saying it's not over yet. Okay, we still have a lot of oversupply of oil, and not as much demand. But again, demand is recovering very nicely in countries that have handled the pandemic well. And going forward, they expect to see this continue and this to be a positive note on Frontline's business. Okay, so I've talked a lot about Frontline, and of course, I think in general, the people who are investing in tankers, they see a recovery in this. Okay, and I've been saying this for quite some time. If you own some tankers, I've owned NAT shares even when they were below $3 a share, and there is some positive turnaround. Okay, so I would not sell my shares now because I do think that these shares are going to go higher. Okay, so again, Frontline's looking decently nice. Still, if you're looking at the 1 year, it's still very below the $8 or $9 it was, even $10 at the height of the pandemic. But again, you're seeing this nice upward positive trend. Okay, so let's move on to NAT, a stock that I own. My cost basis is around like $5.50, I think. And again, I'm still holding strong. I'm holding for the dividends. I'm holding, of course, for this stock to recover because I do think a recovery is due. And NAT is up on the week by 3.4%. Of course, they're expected to announce their results, I think, on the 26th of February. So I'll be, of course, capturing them and looking at them more in depth. And if we're looking at some more technicals of NAT, this is a 3-month chart. These candles are the daily candles here. We can see there was a huge spike up. This was when they made like a 14% move in NAT. Of course, it's been down since then, but we see some support at around $3.34. And if we're looking at the MACD, it's above the signal, so this is definitely a bullish sign. However, it's curving downwards, which is not something that I like to see. But hopefully, this trend could easily be reversed. But again, if it keeps moving downwards and goes below the zero, then that is a bearish trend. But right now, it is still very much bullish. Okay, and if we're looking at the relative strength index, with 20 being oversold, 80 being overbought, it's kind of in the middle there at 55. Okay, so I like that. I like my odds here. Would I invest in shares of NAT right now? I'm not so sure. I think there are better opportunities in the tanker market, potentially even Frontline or EURN. Those are two solid companies. Probably EURN. But NAT is a very Robinhood friendly investment. So what I mean by this is if someone is looking to invest in the oil tanker market, I think they're more likely to invest in NAT than they are EURN, even though EURN may be a better company because people are more familiar with NAT. Okay, this was like the retail investment baby or deer when you're looking at the tanker market is NAT. Okay, and they seem to like Herjborn Hansen, which is the CEO of NAT. They like his character. Okay, so I would expect again more volatile moves from NAT than the other stocks, but at the same time they do tend to move together. Okay, NAT had a good week. Frontline had a good week. EURN also had a good week, and speaking of EURN also increased by 6% on the week, which is again a very positive note. They already reported their Q4 results, and again they shared the same sentiment of Frontline that 2021 and beyond, there's going to be not necessarily a super cycle, but there's going to be increased demand for freights of oil. Okay, which will be of course positive for tanker shipping companies. And finally, DHT. On the 5 days, it's still up, but not by as much, only by 0.69%. So again, tankers tend to move together, and they tend to move in unison. And it does seem like overall, the way that people are investing in these oil tankers, that it is signaling a recovery. Okay, oil is also nearing its 1-year highs. It was like $61. Partly that was due to the whole Texas shutdown situation where Texas had to go into lockdown because they have a power grid that's independent from the federal government. So, but anyways, and that pushed oil prices up as well. But there's a lot of positive things going on for the tanker market. Okay, and I would sum up like this. So number one, of course, we have the return of demand of oil due to the easing of lockdowns and, of course, vaccinations. So that's a positive development, which will, again, when you have increased oil, you need increased transportation of oil. The second thing is oil prices go up, which signal increased demand for oil as well. But the reason why that's good is because if oil goes up, more people will be incentivized to produce oil from wells. Okay, and more oil from wells means more oil needs to be transported. And three, I would say the Asian recovery. Okay, so Asian countries are doing quite well right now. And what that means is if Asian countries are doing well, they will start to produce more oil, and they'll also boost up the tanker market right now because, of course, oil created in one place needs to be shipped off to another place, which, of course, is going to drive prices of these tankers up. Okay, so I really like these positive developments. Of course, the vaccination is also the fourth development, which would, again, spur demand of oil and, of course, the oil tanker market. So that's all I have for you today. Of course, I'm going to be holding all my NAT shares. That's basically the only position in my portfolio where I'm down. But you know, I see these dividends as very nice right now. I see the recovery in 2021 and 2022 as very solid. And again, the market is just one way to transfer wealth from the inpatient to the patient. Okay, so that's it. That's all I have for you today. Please remember to subscribe to my channel if you haven't already, and like this video. Also, if you're a Canadian and you want to invest in no commission trading, check out Wealthsimple. I have a referral link down in the description below. I will say that if you invest, when you invest $100, you receive 10 extra dollars, and I also receive $25 from that. Okay, so it's a win-win situation. And if you're Canadian, you might as well check that out, because right now I invest with Wealthsimple, but I also invest with TD, but that has like a $10 commission per trade. Okay, so if you're doing many trades, you kind of get ripped off. But anyways, that's one thing to check out. Take care. Have a great day. Hope you're having a fantastic Sunday. Cheers, and I'll see you later.